Great, Dale. I have you. It's Katie on the
Oh,
line.
hi, Katie. Pleasure to meet you. How are
You
you?
as well. Very good, thanks.
Yeah, it took a while, and see how time flies. Have
That's
you
right.
ever have you ever used Zoom?
I have you zoomed. Are we doing
Okay.
video here or are we just screen sharing?
That's optional, but sharing your screen would be good.
Okay,
That's a
well,
green
let's do
box.
that. We'll start with my Command Central here on my
Okay.
Bloomberg terminal.
Okay.
And let me know if you see
Okay.
it.
We've got it. We've got it.
Okay, good.
All right. So, Katie, I'd like to start, and Peter referred me to you, and I have a lot of respect for his work. So, any referral from Peter Bookvar is good enough for me. And then I went to your website and I took a look at your background, and maybe you could share with our listeners and people that will be viewing the video later a little bit about your journey and how you ended up at with your own company at Fair Lead Strategies LLC. What were you doing before you entered the business, and what was the catalyst for you getting into the business?
Hey, believe it or not, I've been in the business since I graduated from college. So I was really set on the
Okay,
path very, very early on. This was back in the early 90s. And I studied technical analysis, which is my discipline, and not just my primary, but my sole discipline. I studied
okay.
it in college, and I had an internship with a firm called Dorsey Wright and Associates. They do point and figure
Tom
charting.
Dorsey.
Tom Dorsey, exactly.
Yeah, yeah, sure.
Great mentor, of course.
Yeah, boy, you were blessed,
I was.
and a lot of floor traders. I cut my teeth on the floor of the CME. I mean, X's and O's were what those guys used, and
That's right.
they'd have their clerks run up and say, "Well, we have a reversal here," and they'd go to work. So, okay, Tom Dorsey. So, I do you still use point and figures?
I've sort of morphed in my discipline away from point and figures, in part because I ultimately moved from working on the buy side, sort of hand charting these point and figure charts,
Oh,
to then
yes.
working, as a sales assistant for DLJ out in San Francisco, and realizing that the marketability of some of the point and figure charts for folks that were unfamiliar with charts in general, it just wasn't quite there. So it was difficult for someone in their young 20s to explain. And I went with something a little bit more accessible and digestible to the layman, which of course are these bar charts and moving
Okay.
averages and things like that. So that's become my discipline, is using the bar
Okay.
charts, using a lot of indicators overlaid on these bar charts, as you can see from my screen here. And then
Okay.
also being somewhat US equity centric, focusing on things like breadth and sentiment to the market internal measures, and volume, which of course is not really a part of point and figure charting. So
Any books besides Tom? I cut my teeth on technical analysis of stock trends by Edwards and McGee. Any authors or any other mentors that you had in the business that were influential in
yeah,
your work?
the books, the Edwards and McGee, of course, it's foundational. Technical analysis of the futures markets is another one by John Murphy. All of
Oh,
these
yes.
textbooks are really key, and certainly set me on the right path. So maybe they're not the most exciting reads necessarily, but they definitely give you a good foundation for technical analysis. And I also got a lot out of the CMT program. It's like our version of the CFA, the Chartered Market Technician program. And with that, it's
Okay.
a 3-level sort of exam series, and you do a lot of studying to pass that course. And that also sort of gave me the full breadth and scope of technical analysis. But as for other mentors, I would have to say Ralph Ekampora was certainly one of them. He actually visited my alma mater when I was sitting in that technical analysis class, and he stood in front of the classroom and tore the Wall Street Journal in half and said, "You don't need this anymore." So, and,
Yeah, that's
and
great.
for a
Yeah.
bunch of sort of finance 101 students, it was
Oh, yeah.
definitely impactful. And so he, along the way, has sort of shepherded me through the discipline, and sort of an advocate for it. So definitely someone who I've learned a lot from and admire greatly.
Okay, so I'm looking at your chart, and maybe we can start with what you have on top, left-hand corner, the Dixie. That's kind of our bailiwick here at ForexAnalytix. And I see you use looks like clouds, Ichimoku clouds, and
Mm-hmm.
I see a bunch of numbers there. Is that DeMark
That is
stuff?
DeMark. And
And
DeMark's pretty relevant right now for the dollar index. So I thought it might be
okay,
a good
and
place to start.
okay, let's do that. Plus some type of stochastic at the bottom. Is that what you
Mm-hmm.
use for triggers or divergences? Maybe you could just give us a breakdown, talk dollar for a little while, and
Right.
enlarge.
And
Can you enlarge that chart?
yeah, let me navigate through these charts with you all. So
Okay.
just in the top left here is a daily bar chart. As you mentioned, there's Ichimoku or the cloud model, a couple of different moving averages. I like to use the 50-day and the 200-day. You see a
Me too.
stochastic oscillator there. And then in the
Mm,
bottom two windows, you see more moving averages. Just I like to look at them in combination, and the trusty MACD indicator, which is a great gauge.
okay. You still with us? Uh-oh. Katie? Yeah, we lost her. Maybe she'll log back in. I could tell it was going to be an excellent interview. What song is that, DJ? Katie lied? Maybe she's coming back now. Let's just hang out for a few minutes, see what if she comes back. Darn technology. Oh, Taj Mahal. Okay. Who's worried? Anyone worried about what's happening in the world? Blues Brothers. Okay. I could always sing. You guys want me to sing? Or would we lose more attendees? Let me see if I have her on Twitter. See what she says. No guitar? Okay. Okay. Because it's always out of tune, Forex scale? Or my voice? I am on Zoom. Okay. Let me look for her again. Okay.
Bill, I think I have you back.
Okay, great, Katie.
Forgive me, I'm not sure. It's some heavy duty charting software that we're running here, so sometimes
Oh,
the
okay.
screens just don't cooperate.
Okay. Yeah, our attendees are saying it's really hard for them to see the individual ones that you have up, but if you
Yeah.
can't
So
change them,
I can make them bigger here. So, and then
okay.
as I mentioned, off to the right here is the monthly chart. So that's sort of the scope of it all. So we'll enlarge in this chart here to start, and hopefully that makes it easier for the
Okay,
folks
that's good.
to see it.
Yep.
So here's the dollar index as mentioned, and notice that just in the past 2 weeks, it has a breakdown below a support level. So we were watching this sort of 92 and change level. It's also a level on the monthly cloud chart. So it was a very important level, not just on a short-term basis, but a long-term basis as well. And a pretty decisive breakdown. Notice it came after a failed test of the cloud resistance. So it came up above, just posted 1 day above, but failed. I always wait for breakouts to be confirmed. And by that, I mean a couple of closes above a level. And that helps us avoid exactly what happened here, which is essentially sort of a false breakout. And now that we have this breakdown, it does support the downtrend that's already been in place for months now. But we have a DeMark signal, the likes of which we have not seen since this low here on July 30th or 31st. And this DeMark signal, you see it denoted by the 13. It supports a counter trend move no less than 2 weeks in duration. So we're looking for an oversold bounce. You can see it's also oversold based on the stochastics below 20% there. That would come back up into this potential resistance. Could even go as high as the cloud again without reversing that intermediate term downtrend. So that's what we would be positioned for, is for an oversold bounce, but something that's counter trend. And of course, if you're taking a trade and it's counter trend, you have to be nimble and very sensitive to any shifts to the downside.
How would you manage risk on longs here?
On longs, I would just make sure that the signal that we have from the DeMark indicators is not stopped out. And the beauty of some of these DeMark indicators, this one here is called TD combos, that they have automated risk levels that pop up on the chart with the signals. So with that 13 signal, we have an automated risk level. It's 89.90. An open below that level would stop out of position. So if that's not too uncomfortable in terms of percentages, right? That's where the signal would actually be stopped out. And that's where we would close out long positions if taking counter trend positions here.
Okay. So do you trade the dollar? And do you do it with futures, or do you trade?
I don't. So I'm really more of an analyst than a trader. So I have an independent research firm, as you mentioned, Fairlead Strategies. After about 20 years on Wall Street, I went off and started my own shop. And now I publish research for not only institutions, which is, my area of focus previously on Wall Street, but also individuals. So we have a market letter that we publish every day, and then a couple of more, deep dives that we write every week. And the dollar index is a regular weekly feature of ours.
Okay. Have you traded in the past, Katie? Have you found that perhaps because of your emotional, mental makeup that you're a better analyst and trader?
There is no doubt about it.
Okay.
So
all right.
I have,
because I do both. I do both, but I'll admit I'm a better analyst than trader, because when the emotions come in during the trading, and in fact, I've had people say to me, Katie, Dale, why do you even give us a target or objective? You never sit for them.
I know, right? We let our emotional biases get in the way, don't we?
Well, first daylight syndrome. Anyway, so you're looking just for a bear market rally. Is there anything that would change the picture for it being more than just a bear market rally? Because there are still a few left long-term dollar bulls. Is there anything that would technically tell you that things have changed, maybe back over 94?
Yeah, back over the upper boundary of the cloud. It's a moving target, so we won't know where that is, once it's being tested, if it's being tested. But that would be certainly something that would be, it would enhance it otherwise. Now, the other thing I would focus on also is the chart. You see it's on a relatively new sell signal, and it's diverging. So it does support the downtrend that is underway here. Now, if we were to see a whipsaw, so a quick buy signal develop in the MACD, then of course that would be indicative of something perhaps more than what we're anticipating at this time in terms of an
Okay, so short term, we're on a sell signal still, and we have a DeMark buy. How do you rationalize or rectify that? Do you take perhaps you have subscribers that have both swing trade accounts and position trade accounts, and in one they could be short the dollar, and another they might be able to just trade correction for scalp?
So we try to address all time horizons. So term work, which is of course derived from something like the monthly bar chart, which you can see here, and there's that monthly cloud model that I referenced, that will inform our short-term biases. So let's say, for example, you have a long-term uptrend for the dollar and you had an oversold reading on a short-term basis. You would be more inclined to act on that oversold reading because of the uptrend. than the current status, which of course is a downtrend and pending breakdown. So the long-term work always informs our short-term analysis, and we try to make sure that folks understand, the biases for those three different time horizons, knowing that our clients have varied sort of outlooks. We have some folks that are focusing 2 years plus, and then some that are even focused 2 days. So it really runs the gamut.
Okay. Maybe we could shift gears into something like gold or silver.
Sure.
Is that part of your coverage?
It is. We cover gold on a weekly basis as well. And of course, it's been in what I call correction mode because gold is in a long-term uptrend, and we'll give it a chance to pull up here. It's going to be slow. Long-term uptrend, but within that context, it peaked essentially in August and has been trending lower. So let me show you here.
Got it. The one on top.
Reflecting the long-term uptrend. What we've done, we saw this breakdown unfolding below this previous sort of resistance and support level. And we also noticed that it had taken out a Fibonacci retracement. So that was about 1855. This is based on which contract is it? I think, yeah, February.
Okay. And we recently retested 1850. What's your technical bias now?
I think we should assume that this oversold bounce will falter somewhere in here below or near the downtrending 50-day moving average, because this breakdown below not only the previous lows, but also the Fibonacci, to me, targets the next Fibonacci of importance, which is the 61.8% retracement of 1705 for gold. So I think as soon as we see those stochastics roll, that we'll have an opportunity to put out another short position on gold if you're so inclined, keeping in mind that it is a long-term uptrend. So it's still somewhat of a counter trend position in that on that front. But as long as you have the short-term gauges on your side, I think there's some value in taking that trade. I'd like to see these stochastics roll over. That's when you get sort of a sell signal. As it stands, we actually have a MACD buy signal on the daily. So I don't think the trade is ready to be put on right now, but I think that we'll have it within the next 1 or 2 weeks.
Okay, so when you get conflicting information from different signals, are there ever times when everything lines up, Katie? Or is there always a fly in the ointment that you just have to acknowledge? Is there ever really a perfect trade?
Market. That's when things try to, or when things tend to line up a little bit better. Can you hear me, Dale?
Yeah, every once in a while you break up on me.
Yeah, I know it's not ideal. We have a lot of people in the
house. We'll do this. Right, we'll do this again, Katie. I like your content. Why don't we wrap it with say the S&Ps? Are we getting maybe into an area where DeMark might be looking for some type of short-term pullback in NASDAQ or S&Ps?
Believe it or not, we are not. So this is the monthly. You see the monthly MACD diverging very strongly positive. Same can be said about the weekly MACD. And if you look at the recent action back to the September high as consolidation, you can arrive at a pretty impressive measured move projection from the breakout to new highs that we've seen. Whether you want to use the 61.8% extension, 40.72, it's all very positive. Now, in terms of the DeMark, as to your question, we do not have any DeMark sell signals. And the sell signals that we've seen of late have not been super timely. If you look at these 13s, here was a sell signal, here was a sell signal, both preceded pullbacks by several days. So it is something we'll be watching for, but it's not something that we have at the moment. This morning in our morning research, we did highlight in the S&P futures another signal per the DeMark indicators that has lesser implications. It's a 9 on the TD setup, and I can show it to you here. You see this 9 with the arrow, and that supports 4 bars of consolidation. So an interruption in the up move. So we are looking for what we call a digestion week this week. Obviously, we've seen some pretty strong gains. So that
Okay, you cut off again, Katie. Why don't we do this when you come back on the air and I could hear you?
That's great. I'd love to join you again.
Okay, so why don't you show everyone your website?
Okay.
And how they could, follow you and, they could read your stuff without redacted statements. Like this interview has some redactions in it, but we're going to do it again. Fairlead Strategies LLC.com, is that the website address?
It's actually fairleadstrategies.com. You can see it here. And if you go to this tab up here, you can go to request a trial or to our services tab, and you can read a description of our services. You can sign up for our basic plan via the website or basic plan plus. You can source past media appearances and events and really catch up on our views this way too. We do have a Twitter handle. It's at Stockton Katie, and we're not the most prolific people on social media, but we try to post there from time to time.
Okay, well, it was very nice meeting you, Katie, and we'll set up another time. I wish you and your family, your loved ones, that they remain untouched with what's happening with COVID, and that you wrap up the year strongly, and we'll get back together. And you know what happens when you survive an interview with me?
No, I don't. Tell me.
You'll become my trading warrior sister.
Oh,
even
I like
though you're
that.
or you're my trading analyst sister.
I like that. I like the word warrior. I'll take it.
All right. So you have to be in this business, right? I mean, if anyone ever has this thought in their head, I hope this one works, I advise them to shut down their platform. So
that's right.
Great meeting you, Katie, and looking forward to doing this again without the sound edits. And
yes, me too.
Thank you for your time.
And happy holidays to you and yours.
All right. Thank you, Katie. Everyone, Katie Stockton, you can follow her at Stockton Katie. And as you can tell by this presentation, this is a very disciplined technical trader. So check her out. And that's going to be a wrap. And, don't just count your clouds or your DeMark numbers, count your blessings. And we'll see everyone for Turnaround Tuesday. Adios. Thanks again, Katie.
Thank you.